G'day legends and welcome back to another video. Bitcoin has seen a bearish weekly candle close, closing below the bull market support band for the first time since March-April 2025. In today's video, we are going to be discussing what this means and why it is suggestive of a continued downtrend to 98 to 100,000. We are also doing a complete and comprehensive short-term analysis discussing exactly what is happening on the immediate price action, if this current downtrend since 126,000 will likely continue lower, what the buyers will need to do to reverse this trend, and of course, not only our targets and expectations, but the key levels you should be watching from a technical and a structural perspective. And finally, we'll be finishing up on the total cryptocurrency market cap, discussing the key levels to watch and what is happening as we speak, as well as the altcoin market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in joining our VIP channel, go ahead and check that out in the pinned comment of the free channel. Contact our admin or click these links for more info. Let's go ahead, guys, and jump on in. So as we can see, over the weekend, we did really not see too much price action. We can see here Bitcoin more or less was chopping sideways through essentially the entirety of Saturday and Sunday, and just into this weekly candle close, we have seen a bit of an attempt by the buyers to push the price up. However, we have met ourselves back at resistance 109,500 resistance, which of course was that low level of support we maintained above prior to seeing the breakdown and correction into 103,000. We have come back up to now retest what was once support as a point of resistance, and as we can see already, we are seeing signs of weakness with our negative momentum shifts developing on the RSI, weakening positive momentum represented by a Marcus of the B and my custom indicator, of course, suggestive that momentum here is starting to fizzle out, maybe resulting in a potential pullback for Bitcoin, which is very, very likely, as we'll discuss in the video today. In terms of the weekly candle close, we have broken below the bull market support band. The bull market support band is not the best indicator, I think, in terms of macro direction, but when we've seen periods of extended price action remaining above it and retesting it / bouncing from, and then finally breaking below, this is a key shift in the sentiment of the market, or at least a key shift in this indicator, which may increase the potential for extended corrections down into the 50 EMA for full mean reversion, or the Gaussian channel upper band. Both these levels sitting around 100 to 98,000, of course, suggestive of continuations lower, and something we'll discuss in the video today. Alongside that, with the RSI still being underneath this yearly uptrend, suggestive of the fact that we have weekly negative momentum, the trend is very much still down and very much still quite grim. A lot to discuss today. Let's start on the market data, 24-hour volume and liquidations. Let's jump on into it. So coming out of the weekend, we've actually seen a bit of a surge in volume. We're up 48%, 254 million. Liquidations up 91%, 273 million. The majority of those liquidations coming from short positions, but we're starting to see over the last 12 hours some more long liquidations pile in, particularly over the last hour, as Bitcoin starts to pull back a little bit from this 109.5k resistance. Moving over to the DXY, the DXY is holding steady. Again, we've seen more of sideways price action for DXY now for quite some months. Of course, this is as a result of the building uncertainty in the market, whether we take a look at the conflicts going along with Israel and Gaza, of course, those ceasefires being broken, then being reactivated, that does cause some uncertainty. Whether we look at the trade war and tariffs with USA and China, there's still a lot of uncertainty around that. And then if we take a look at the expectations for future interest rate reductions, there's still quite a fair bit of uncertainty around that, as the Federal Reserve is still playing a wait-and-see approach with how interest rate reductions have impacted inflation. So we're very much waiting to see how that inflation data comes out, because that's going to formulate a bit of a tone shift or narrative moving into the next few weeks into potential interest rate decisions. So a lot of wait and seeing, a lot of, I guess, adaptability in the market, and a lot of uncertainty building, which has kind of pushed the market down a little bit, which is expected. As uncertainty builds, the market does become a little bit more risk off. So taking a risk on, should I say, taking a look at the rest of the market, the S&P 500 still showing a little bit of weakness. If we move over to the daily chart, we have said, and we stand by this, the S&P 500 is looking exceptionally weak here. We created a possible top here at 6,900. We saw a flash correction, of course, with all the news going on with the tariffs. It has built slowly back upwards, but for us to be confident we are going higher, we need to see this local top clear. Until then, we are expecting potential further corrections to 6,300 for the S&P 500. Only upon the breakout of 6,800 will we expect continuations. And if we do break 6,800, we are looking for 7,000 as a target. So bearish below, bullish above. Targets at the moment are going to be lower for the S&P. Very, very simple stuff. If we take a look at the 3-day on the S&P, we have also seen the first weakening positive momentum shift basically for 2025 over here. We can see here a weakening positive momentum shift for the S&P 500. This is the beginning of 2025 right over here. The first time we have seen that in 2025 could suggest a bit of a pullback is on the way. Let's go ahead, guys, and jump into Bitcoin. Before we get into it, make sure to smash that like button. Of course, head over to the comment section. Let me know what you think about the market and what you think is going to happen with Bitcoin. Is the top in? Are we going to be going lower? But most importantly, guys, if you're interested in supporting the content, you can also sign up to BitGet, BitUnix, and BingX. These are the links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me making the content, and of course, you'll support yourself trading on exchanges I use and I trust. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and get into it. I want to start on the short-term charts and then build up to the macro, then taking a look at the weekly. So very quickly, guys, starting on the short term, we can see Bitcoin has been in a downtrend on the daily chart for quite some time now. You can see we created a classic break of structure deviation set up over here. We had the break above our prior sell side liquidity. We saw some bearish divergences develop across the smaller time frames, 4 to 12 hours across. We saw the pushback below, suggestive of a deviation from range high, resulting in a reversal, eventually breaking 120,000, confirming this was a local top, resulting in full-blown corrections all the way back down. And even through this bounce we saw after the major flash liquidation event, the market has still recovered downward. We have seen this bounce, but we're pushing back down. So the downtrend is very much still active. If we take a look at something like a 4-hourly chart, you can see here through the entirety of the price action since that top on the 6th of October, we have essentially been creating these lower highs for Bitcoin. These are just constant lower highs, suggesting that the price is still in a downtrend. For the buyers to get back in control, we need to see some sort of structural shift to suggest that we've had a change in this trend. At the moment, we have seen nothing to suggest that. Even if we take a look at the last 48 hours of price action, this small bounce here has just resulted in the price coming back to retest the point of resistance. We have not even broken through any prior horizontal levels of resistance through this move. So at the moment, I am not bullish in Bitcoin still in the short term. I am still expecting lower. Let's take a look first and foremost, what the buyers need to do to reverse this trend. Now, officially for this trend to be reversed, we need to see a prior lower high reclaimed as a point of support. Initially, we would need to see a break and maintain above 109,500 because this is going to be our prior support. We need to return that into support. But for the buyers to officially come back in control, the most important level is that $116,000 level. If we are able to break 116,000, that is when we will be looking for continuations potentially to new highs again. Until that happens, the expectation is downward pointing into lows of 100 to 98,000. If we take a look at the short-term price action, like we mentioned in the intro, we have seen a bounce into prior levels of support. Prior support becomes future resistance. With this bounce, we can see already the price is dropping as we speak. We have seen weakening positive momentum represented by our momentum indicator, suggesting again that either buying volume is decreasing or selling is starting to pick up at resistance. And if we take a look at the RSI here, we run the risk of a negative momentum shift, again drawing that trend line in from the respective lows on the price action to match the respective lows of the RSI, one there, one there. A breakdown of the RSI here would increase the potential that the price action is going to be losing this uptrend and of course moving back down into points of support, looking around 106,000, looking around 104.4, and worst case scenario, potentially all the way into 100 to 98,000. So the short-term price action, this bounce does not seem like enough for me to be confident that the buyers are back in control. We need to see at least the price get above 109,500 to be confident the buyers will push the price up just a little bit more. Until then, this does look like a reversal before we see continuations lower. If we zoom out to something like a daily chart here, guys, and just delete everything, you can see even on the daily chart, we actually came back up to retest this change of character level. So our prior sell side liquidity retested as resistance. We closed just on there and we have been pushing down on the daily since that daily close. Again, solidifying this as a key level, that 109.5 level, that change of character level as a point of resistance. Again, for us to have any confidence of price will reverse, we need to get that daily candle close above 109.5. We need to get above there and show some strength above. Until that happens, the risk of further corrections and continuations is very much likely. Now, I will reiterate this point. Even if we were to see the price push up, that is not going to be a sign we're going to do higher. We need to break through this 116,000 level to be confident that we are going to come back up and retest these ranges. At best case scenario, we could see pushes up and then continuations back down. So this is really the line in the sand we need to break through if the buyers want to get in control. Until then, it is just looking quite weak. Let's move over now to something like a 3-day chart, and then we'll jump into the weekly. So moving to a 3-day chart, guys, you can see here, the 3-day chart, we are sitting below that 50 EMA still, a level we will need to reclaim, of course. You can see already, we held below the 50 EMA as resistance. We held above the 50 EMA as support. This 50 EMA is going to be acting as a point of resistance now. If we do commence this downtrend fully, the risk is that we move towards the 200 moving average, which is sitting around that $90,000 to $88,000 region. If we take a look at the weekly chart, the $90,000 to $88,000 region is sitting actually at the midline of the Gaussian channel. So if we see continuations downwards to 98 to 100,000, which is the Gaussian channel upper band and 50 EMA, there is a chance that those levels do not hold and we actually see continuations into the midline. And we know already that breaking the 50 EMA and Gaussian channel upper band, historically, if we take a look at Bitcoin's price action historically, prime example over here, if we go back at prior cycles, we'll show you really quickly prior cycles bull market support band. Let's take a look at that on the weekly chart. We can see prior cycles breaking below over here 50 EMA and Gaussian channel upper band, breaking below here 50 EMA and Gaussian channel upper band. That has actually triggered the bear market. Well, it hasn't triggered the bear market. That's not what causes the bear market, but that is a good sign there is enough high time frame weakness that could spill over into a continued downtrend, which is what we would traditionally call the bear market, sorry, not the bull market, the bear market. So the breakdown of these levels, particularly the 50 EMA and Gaussian channel upper band, has the risk of actually developing into an even greater downtrend into 88 to 90,000, something we've got to pay attention to as the price action develops, particularly as the price action develops underneath these key points of resistance, particularly 109.5 and 116,000. Let's quickly jump back to the weekly chart because we just had the weekly candle close, guys. We've kind of talked about it a bit already in this video, but let's go over it really quickly again. So the weekly candle close, it was a bearish weekly candle close. There is absolutely no doubt about that in any regard. It was a very, very large red candle, of course, but it's not so much the candle itself. It's, if we look at the technical levels, it's where the weekly candle itself actually closed, and it closed underneath the bull market support band. Now, we know already the bull market support band has been quite a, I would say, a hit and miss indicator when predicting reversals, but if we take a look at how the price has respected the bull market support band, essentially since that breakout in April, we've actually respected it incredibly well. So the breakdown of this level is a little bit more significant now, essentially because of how much we've respected this level. So if we've bounced from this point of support 10 times in a row and then finally break down, that breakdown is going to hold a lot more significance. If we just broke down immediately, we only bounced once. Okay, so this is going to be a sign of a potential continuation into the Gaussian channel upper band and the 50 EMA. Of course, we've seen prior breakdowns result in those corrections to the 50 EMA and Gaussian channel upper band. That is, of course, something we should be paying attention to because, like we said already, the Gaussian channel upper band and the 50 EMA, when broken, increases the risk of a potential bear market to start. Now, when we're looking at the RSI, of course, we did have the breakdown of that uptrend, that yearly uptrend on the RSI, but there is also another level we are watching, and that is going to be this horizontal base of support on the RSI. This is essentially what I like to call the bull market support in terms of momentum for Bitcoin. If we take a look at when the bull market started, the bull market officially started upon the breakout of 32,000. This is when ETF discussions really started to become a real possibility for Bitcoin. The bear market ended, of course, when we broke out of this major downtrend at around about 19,000, but the bull market started around 32,000. Since the beginning of the bull market, we have sat above this horizontal level on the RSI, but not only have we sat above it, every single retest thus far has resulted in reversals for Bitcoin. So I'm just going to go ahead and draw these vertical lines in. Vertical line 1, vertical line 2, vertical line 3, very roughly. You can see here, if we just circle these points, you can see from those circle points, we have seen continuations upwards from those bounces. Now, every single one of those bounces happened at the 50 EMA and Gaussian channel. So if we see the RSI break below here, and we'll see the breakdown of the Gaussian channel 50 EMA, that for me is going to be the sign that the bull market is over. That will be the sign to me that the bull market is over from purely a structural and technical perspective. Of course, policy determines demand, so we need to see a policy shift. Of course, if the narrative starts to spill more towards we're pausing interest rates, we're not dropping them, and that could potentially move into, okay, we're not going to see any more interest rate drops for an unforeseeable amount of time, that could spark fear in the market, and that could drive the asset prices down. Something to pay attention to. But this is the big thing I really want to talk about today, which is at this point, I believe the bear market starts. Until then, as you guys know, and have you guys been following, I've been bearish on Bitcoin essentially since 122,000.3, and I will remain bearish until we see some proper structural shifts to result in continuations higher. And again, not just randomly turning bearish, I was bullish this entire time from 16.5k all the way up. I had some moments where I was like, okay, we're expecting corrections. I turned bullish over here. But overall, guys, I will turn macro bearish when these levels break down for a bear market. Until then, I am bearish on the short term, but I do have a little bit of hope. But that hope is more, I guess, it's not founded in, I guess, logic from the structural charts or the technical charts. And more or less, we just want to see the market go up, right? We want to see the market go up. We're not acting on that hope. We have hope the market will rise, but if we're looking at it logically from the charts, we need to see these key levels break first before the price can go higher. And therefore, the only actions we can do is act on how the charts are developing. And of course, the charts are developing in a downtrend, so we need to be looking at shorting these points of resistance, which we have been doing since this top over here. So thank you for tuning in, guys. A very interesting time for Bitcoin. We'll quickly wrap up the market with this. And this is another really big warning sign. This is going to be the weekly breakdown of the $3.65 trillion level for the total cryptocurrency market cap. Essentially, if you want to, boil down the crypto market cap to one chart, this is the chart you use. If you want to boil down whether or not crypto is bullish or bearish, you can do it with this chart. The very simple point is we're breaking below the prior weekly high. This is, of course, not a good thing. We turned bearish upon the deviation set up at 4.18 trillion. We are remaining bearish. And of course, the breakdown of this level here confirms that we are going to see continuations lower, potentially the 3 trillion. Of course, if that happens, it is incredibly likely Bitcoin moves to the midline, which results in a breakdown of all the key levels we just discussed and a continuation in the downtrend. So pay attention, guys. We've got some big weeks coming up for Bitcoin. It's going to be super interesting. Thank you for tuning in. I'll catch you guys in the next video tomorrow. See you then.